All right, something's brewing in the markets right now. You can feel it. AI stocks are exploding, chip demand is off the charts, and tech giants are quietly gearing up for what could be the biggest boom since the iPhone era. But here's the thing. The smartest players on Wall Street aren't just watching it happen, they're engineering it. And leading the pack once again is Tiger Global. Yeah, the same hedge fund that's been at the center of every major tech wave for the past 2 decades, from e-commerce to streaming to AI, is making moves again. But this time, what they're doing looks different. Because while everyone's chasing short-term hype, Tiger Global's quietly setting the stage for what could be the next decade of technological growth. Let's talk about what's actually going on. Over the past few weeks, Tiger Global's been reshaping its entire portfolio, pulling back from older, mature tech names and funneling billions into a new generation of industries. They're calling it the convergence play, and it's all about one thing: the moment where artificial intelligence, hardware, and energy finally collide. You've heard of the AI boom, you've heard of the chip wars, but the real story, the next big tech boom, isn't AI itself. It's everything that AI needs to exist. Let me explain. AI is hungry. It needs compute power, massive storage, constant connectivity, and clean energy to run nonstop. And right now, the entire world is racing to build that infrastructure. That's where Tiger Global's putting its chips, literally and figuratively. They've started building positions across 3 categories that most investors aren't even looking at yet. Number 1, energy tech. Tiger Global's quietly buying into renewable energy producers and battery companies, not because they suddenly care about ESG, but because AI data centers are consuming power at record levels. Every time someone trains a model, that's megawatts of electricity, and Tiger's betting on the companies that supply it. Number 2, AI hardware. We're not talking about just NVIDIA anymore. They're going deeper, investing in startups building AI accelerators, neural chips, and advanced networking components. They know the next shortage isn't GPUs, it's everything around GPUs: cables, cooling, data pipes, server architecture. And whoever solves those bottlenecks, that's the next trillion-dollar story. And number 3, automation infrastructure. This one's sneaky. Tiger's putting money into companies that use AI to optimize industries: logistics, manufacturing, energy management, healthcare. Because when AI leaves the lab and enters the real world, those are the businesses that explode in value. So what does all that mean? It means Tiger Global isn't betting on apps. They're betting on foundations. They're not trying to pick the next ChatGPT or the next Tesla. They're betting on the roads that every one of those companies will have to drive on. And here's what's wild. Tiger's AI analytics system, the Pulse, has already identified what they believe are the 5 fastest-growing subsectors for the next wave of tech expansion: AI manufacturing, quantum networking, edge computing, sustainable energy grids, and real-world robotics. Each of those sectors could unlock multi-trillion-dollar markets over the next 5 to 10 years. So, while retail traders are out here arguing over which AI stock will double next week, Tiger Global's building positions for the next decade. They're playing chess while everyone else is playing checkers. And you can actually see the pattern. Every time Tiger moves into a new sector, capital follows. That's what happened with e-commerce in 2010, fintech in 2015, and cloud infrastructure in 2020. When Tiger Global goes in, Wall Street eventually catches up, but this time they're not waiting for validation. They're front-running the boom before the headlines even hit. And get this, part of this new convergence strategy involves collaboration with their own portfolio companies. Tiger's using its network of private AI startups to build real-world integrations between industries. Think AI-powered logistics for energy, predictive analytics for chip manufacturing, and smart robotics for warehouse automation. They're not just investing in the future. Now some analysts are calling this reckless. They say Tiger's overexposed to AI, overconfident after its comeback. But history says otherwise. Every time Tiger Global goes all in, they do it because they've already seen something the rest of us haven't. They were early to Facebook, early to Netflix, early to Shopify. Now they're early to the infrastructure of artificial intelligence itself. And here's where it gets exciting. the numbers don't lie. Since the start of 2025, Tiger Global's new portfolio structure has outperformed the Nasdaq by more than 20%. Their positions in AI power and semiconductor logistics are already up double digits. But it's not just the gains that matter, it's the timing. They're entering before the next explosion. You see, markets move in cycles. The first wave of AI was hype, chatbots, viral demos, market buzz. The second wave is happening right now, infrastructure, production, and integration. And the third wave, the one Tiger Global's already preparing for, is convergence. When AI, automation, energy, and connectivity merge into a single global system, that's when the next big tech boom hits. And Tiger's not waiting to react. They're laying the tracks for it right now. So yeah, they definitely know something we don't. Because when the biggest, boldest money on Wall Street starts moving this quietly, this fast, and this confidently, it usually means the future's already being built, and most people just haven't noticed yet. The next tech boom isn't coming, it's already here.